Based on the provided data, the trend for Bitcoin appears to be bearish in the short term. The price has been declining over the past 2 weeks, and the forecast predicts further downward movement. The support price of $84,200 provides a potential floor for the price, while the resistance price of $88,600 acts as a significant barrier. A suitable strategy could involve a short position entry at around $87,000, with a stop-loss order placed at $88,600 to limit potential losses. The target price could be set at $84,200, aiming to capture the potential downside move. This strategy aligns with the bearish trend and utilizes the support and resistance levels. Based on the historical data and forecast, Bitcoin Cash appears to be in a sideways trend with a slight upward bias. The support and resistance levels suggest a range-bound movement. The RSI indicates that the asset is not currently overbought or oversold, hovering around neutral levels. The Bollinger Bands show a narrowing range, suggesting a potential breakout in either direction. Therefore, a conservative strategy would be to wait for a clear breakout above the resistance level of $342. Entry could be triggered at the breakout point with a stop-loss placed below the recent lows around $290. The target price could be set at the upper Bollinger Band, which is currently around $415. This strategy capitalizes on the potential upward momentum while managing risk effectively. Based on the provided historical and forecast data, the trend for stacks appears to be bearish. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $0.692 provides a potential floor for the price, but the resistance level at $0.867 suggests strong selling pressure. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price reaches $0.812. Set a stop-loss order at $0.867 to limit potential losses. The target price for this trade is $0.692, aiming to capitalize on the anticipated price decline. This strategy considers the overall trend, support and resistance levels, and the bearish forecast. Based on the provided data, Ethereum appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below key support levels. The forecast data also predicts further price decline in the coming week. Considering these factors, a bearish strategy is recommended. A suitable entry point would be around $2,230, the predicted price for March 4th. The stop-loss should be placed above the recent resistance level of $2,220, aiming to limit potential losses. The target price could be set at $2,080, the identified support level, with the possibility of further downside if the downtrend persists. This strategy leverages the prevailing bearish sentiment and aims to capitalize on the potential for further price decline. Based on the provided historical and forecast data, XRP appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with a significant drop on March 3rd. The forecast data suggests this downtrend may continue in the coming week. The support price at $2.14 provides a potential floor for the price, but the resistance level at $2.76 is unlikely to be broken in the near term. Considering these factors, a bearish strategy is recommended. A suitable entry point would be around $2.25, below the recent lows and within the support zone. A stop-loss order should be placed at $2.14, the identified support level, to limit potential losses. The target price could be set at $2.05, which represents a further decline of approximately 5% from the entry price. Based on the provided data, Binance Coin appears to be in a downtrend. The historical price data shows a general decline, supported by the forecast data, which predicts further price drops. The RSI, consistently below $50, also indicates bearish momentum. Considering these factors, a short position could be considered. A potential entry point would be around $595, the predicted price on March 4th. The stop loss could be set at $605, the resistance level, to limit potential losses. The target price could be set at $557, the support level, aiming for a 7% return. This strategy incorporates both the downtrend analysis and the support/resistance levels. Based on the provided data, Stellar appears to be in a volatile downtrend. The historical price data shows a consistent decline, punctuated by brief rallies. The forecast data suggests this downtrend is likely to continue in the short term. The RSI, while showing some fluctuations, remains below $50, indicating bearish sentiment. The Bollinger Bands are also compressed, suggesting a potential breakout to the downside. Given these factors, a conservative strategy would be to enter a short position at the market open on March 4, $2,025, with a stop-loss order placed at $0.302, the resistance level. The target price would be set at $0.275, the bottom Bollinger Band for the forecast period. This strategy aims to capitalize on the potential continuation of the downtrend while mitigating risk with a defined stop-loss. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement. The RSI indicator also supports this bearish sentiment, as it remains below $50 and has dipped into oversold territory on several occasions. Considering these factors, a short position strategy is recommended. Enter a short position at the current market price, with a stop-loss order placed at $3.65. This stop-loss level is slightly above the recent resistance level and will help to limit potential losses. The target price for this trade is set at $2.90, which aligns with the forecast price for the end of the next week and represents a potential profit of approximately 19%. This strategy utilizes the downtrend, oversold RSI, and price forecast to capitalize on the potential for further price decline. The historical data shows a volatile trend for Cardano, with a significant drop followed by a sharp rise towards the end of the period. The forecast data suggests a continuation of the upward trend. Based on the support and resistance levels, the price is likely to find support around 75 cents and face resistance at 90 cents. Considering the RSI, a long position can be initiated when the RSI crosses above $40, indicating a potential shift from oversold conditions. The entry price should be around 78 cents, with a stop-loss placed at 75 cents to limit potential losses. The target price can be set at 90 cents, aiming to capture the anticipated upward movement. The Bollinger Bands suggest that the price is currently within the lower band, indicating potential for upward movement. The most efficient strategy combines the upward trend, RSI momentum, and Bollinger Band positioning, making a long position at 78 cents with a stop-loss at 75 cents and a target price of 90 cents a viable option. Based on the provided historical and forecast data, Litecoin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with a significant drop in the last few days. The forecast data suggests that this downtrend is likely to continue in the coming week. The support price of $98.40 provides a potential buying opportunity, but the stop-loss should be set below this level to mitigate risk. A target price of $106, which aligns with the forecast low, could be considered. Considering the RSI, which is currently below $50, indicates a bearish sentiment. The price is trading below the center line of the Bollinger Bands, suggesting a potential for further downside. Therefore, a strategy based on these indicators would involve entering a short position at the market price when it approaches the support level of $98.40. The stop-loss should be placed at $100 to limit potential losses, and the target price could be set at $106. Based on the provided data, Swaycoin appears to be in a downtrend. The price has been declining over the past 2 weeks, with a noticeable drop in the last few days. The forecast data also suggests continued downward movement. Considering this trend, a short position could be profitable. A good entry point for a short position would be around $2.85, close to the current price and slightly above the recent lows. The stop-loss order should be placed at $2.95 to limit potential losses. The target price could be set at $2.50, aligning with the forecast lows and allowing for a significant profit if the downtrend continues. This strategy utilizes the overall trend and the predicted price movement to maximize potential gains while managing risk. Based on the provided data, Aptos appears to be in an upward trend. The historical price data shows a consistent increase over the past 2 weeks, with the forecast data suggesting continued growth in the coming week. The support level at $5.41 provides a solid foundation for this bullish outlook. A potential entry point could be around $5.72, the forecast price for March 4th, setting a stop-loss order at $5.41. The support level would help mitigate risk. A target price of $6.68, the recent high, could be a reasonable objective. In addition to the overall trend, the RSI indicator suggests potential buying opportunities. The RSI has been hovering below the overbought level of $80, indicating that the asset is not yet overvalued. Furthermore, a dip below $20, the oversold level, could present an attractive entry point. The Bollinger Bands, while showing some volatility, generally trend upwards, aligning with the bullish outlook. A breakout above the upper Bollinger Band could signal a significant price surge. Based on the provided data, SE appears to be in an upward trend. The historical price data shows a consistent climb, with support holding strong at $0.164. The forecast data predicts continued growth, further supporting this trend. RSI readings indicate the asset is neither overbought nor oversold, suggesting potential for further upward movement. Therefore, a buy position is recommended. The entry price should be around $0.248, the current closing price. The stop-loss should be set at $0.208, below the recent lows and the lower Bollinger Band. The target price could be set at $0.289, the recent high and the upper Bollinger Band, aiming for a significant profit. This strategy leverages the upward trend and the asset's current position within the Bollinger Bands. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below the $20 day moving average. The forecast data also suggests a continuation of this downtrend in the coming week. Additionally, the RSI indicator is below $50, indicating bearish sentiment. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $18.10. Set a stop-loss order at $18.70 to limit potential losses. The target price for this trade is $17.50, based on the historical support level and the forecast price data. Based on the provided historical and forecast data, Polygon appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. Support and resistance levels are not available in the provided data, so we'll rely on the other indicators to guide our strategy. A buy position could be considered if the RSI dips below $20, indicating an oversold condition. The entry price would be the point at which the RSI crosses below $20. The stop-loss order should be placed below the recent swing low to limit potential losses. The target price could be set at a resistance level identified on the chart, or at a Fibonacci retracement level based on the recent downtrend. Alternatively, we could look for a bullish crossover of the Bollinger Bands, which could signal a potential reversal. In this case, the entry price would be above the upper Bollinger Band, with a stop-loss placed below the lower Bollinger Band. The target price could be set at a previous resistance level or a Fibonacci extension level based on the breakout. Based on the provided historical and forecast data for AEVO, a potential investment strategy can be outlined. The price shows a downward trend in the recent past and the forecast suggests this trend might continue. Therefore, a bearish strategy could be considered. A suitable entry point could be around $0.140, as it aligns with the recent price action and the predicted lower price movement. To manage risk, a stop-loss order should be placed at $0.145, aiming to limit potential losses. The target price could be set at $0.125, based on the forecast data and the potential for further downward movement. In addition to this strategy, the RSI indicator suggests potential oversold conditions in the near future. When the RSI falls below $20, it could signal a buying opportunity. However, given the overall bearish trend, this strategy should be approached cautiously and only if the price action confirms a potential reversal. The Bollinger Bands show price fluctuations within a narrowing range, suggesting potential for a breakout in either direction. If the price breaks below the lower Bollinger Band, it could further confirm the bearish outlook and strengthen the initial strategy. Ultimately, a combination of these strategies, with careful risk management, could potentially lead to profitable outcomes. Based on the provided data, optimism appears to be in a short-term downtrend. The price has been declining over the past 2 weeks, and the forecast suggests further downward movement. Support at $0.932 provides a potential floor, but the RSI is showing signs of oversold conditions, indicating a possible bounce. A buy signal could be triggered if the price rebounds from the support level and the RSI climbs above $30. A long position could be entered at 95 cents with a stop-loss order placed at $0.932 to protect against further downside. The initial target price would be set at $1.05, aiming for a $10% profit. However, if the price breaks below the support level, the position should be exited immediately. Monitoring the RSI and Bollinger Bands closely will be crucial for determining potential entry and exit points. The Bollinger Bands suggest volatility is likely to increase, so managing risk effectively is paramount. Based on the provided data, STRK appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices predict further downward movement. The RSI indicator, while fluctuating, generally remains below $50, suggesting bearish sentiment. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be at the opening price of March 4, $2,025, which is $0.192 USD. The stop-loss order should be placed at $0.198 USD, slightly above the recent lows, to limit potential losses. The target price could be set at $0.177 USD, based on the forecast price for March 7, $2,025. This target price represents a significant downside potential within the predicted downtrend. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline from February 18 to March 3, with a significant drop around February 27. The forecast data also suggests a continuation of this downtrend for the week of March 4. The RSI, hovering below $30 for most of the period, indicates oversold conditions, suggesting a potential for a temporary rebound. However, the Bollinger Bands show narrowing price action, indicating a potential for increased volatility and a possible breakout in either direction. Considering these factors, a cautious short position could be initiated around March 4, when the price is forecast to be around $140. The stop-loss should be placed at $147, above the recent resistance level. The target price could be set at $125, aligning with the lower Bollinger Band and the historical support level. This strategy aims to capitalize on the potential continuation of the downtrend while managing risk with a tight stop-loss order. Based on the provided data, Jupiter appears to be in a sideways trend with a slight downward bias. The historical price data shows fluctuations around the support and resistance levels, indicating indecision in the market. The forecast data suggests a continued downward movement, which aligns with the observed trend. Therefore, a bearish strategy is recommended. We will enter a short position at $0.721, the closing price on March 03, $2,025. The stop-loss will be placed at $0.754, the high on March 03, $0.00225 to limit potential losses. The target price is set at $0.674, the lowest forecast price for the week. This strategy utilizes the predicted price decline and sets protective stop-loss measures. Based on the provided historical and forecast data for render, the trend appears to be bearish with a potential for further decline in the coming week. The price has been fluctuating within a downward channel, with resistance levels around $4.40 and support levels around $3.50. We will employ a combination of RSI and Bollinger Bands to identify entry and exit points. A long position could be initiated if the RSI crosses above $30, indicating a potential oversold condition, and the price rebounds from the support level around $3.50. The entry price would be set at $3.55, with a stop-loss order placed at $3.45 to limit potential losses. The target price would be set at $3.85, aiming for a potential upside of $11%. Conversely, a short position could be considered if the RSI falls below $70, indicating an overbought condition, and the price approaches the resistance level around $4.40. The entry price would be set at $4.35, with a stop-loss order placed at $4.45 to limit potential losses. The target price would be set at $3.95, aiming for a potential downside of $10%. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping significantly from February 18 to March 3. The forecast data further supports this downtrend, predicting a continued decline in price throughout the next week. Considering this, a short position strategy is recommended. A suitable entry price would be around $0.116, which aligns with the support level observed in the historical data. The stop-loss price should be set at 12 cents to limit potential losses. The target price can be set at $0.108 based on the forecast data and the observed downtrend. This strategy leverages the potential for further price decline in Solana name service. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the $20 day moving average. The forecast data also predicts a further decline in price. The RSI indicator is hovering below $30, indicating oversold conditions, suggesting a potential for a short-term bounce. However, the overall trend remains bearish. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.237, the recent resistance level. The target price for this trade is $0.186, the predicted low for the next week. This strategy combines the bearish trend, oversold RSI, and predicted price target. Remember that trading cryptocurrencies carries significant risk, and this strategy should not be considered financial advice. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI, while hovering around neutral levels, hasn't shown any significant bullish divergence. The Bollinger Bands indicate a narrowing range, suggesting a potential breakout in either direction, but the overall trend favors a downward move. Therefore, a short position strategy is recommended. The entry price should be around $0.0000780, with a stop-loss set at $0.000000810 to limit potential losses. The target price could be $0.0000680, based on the forecast data, and the support level around $0.0000670. This strategy capitalizes on the prevailing downtrend and aims to profit from the anticipated price decline. Based on the provided data, Shiba Inu appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. Considering these factors, a short position could be initiated. An entry price around $0.0000139 could be considered, with a stop-loss order placed at $0.0000141 to limit potential losses. The target price could be set at $0.0000129, based on the forecast data and the downtrend. This strategy utilizes the bearish trend and the RSI indicator to identify a potential short opportunity. Based on the provided data, Dog with Hat exhibits a volatile trend with both upward and downward movements. The historical data shows a support level around $0.581, which has held consistently. The forecast data suggests a potential dip in the coming week, with prices hovering around 56 cents to $0.637. Considering these factors, a buy strategy could be implemented with an entry price around 58 cents, a stop-loss order at 56 cents to limit potential losses, and a target price of $0.637, aiming to capitalize on the forecast uptrend. The RSI indicator, which oscillates between $0 and $100, can also be used to identify potential buying opportunities. When the RSI falls below $30, it signals oversold conditions, suggesting a potential price rebound. Monitoring the Bollinger Bands, which measure volatility, can further refine the entry and exit points. If the price breaks above the upper Bollinger Band, it could indicate a strong bullish momentum, warranting a buy order. Conversely, a drop below the lower Bollinger Band might signal a bearish trend, prompting a sell order. Based on the provided historical and forecast data, Doge-Coin appears to be in a sideways trend with potential for a slight downward movement in the coming week. The RSI suggests the asset is not currently oversold or overbought, hovering around the neutral $40 mark. However, the Bollinger Bands indicate potential for volatility, with price action fluctuating within a relatively tight range. Therefore, a cautious approach is recommended. A potential entry point could be around $0.00265, with a stop-loss order placed at $0.00252 to limit potential losses. The target price could be set at $0.00285, aiming to capitalize on a potential bounce back within the established range. This strategy prioritizes risk management by setting a tight stop-loss and focusing on a moderate profit target. Based on the provided data, Near Protocol appears to be in a sideways trend with a slight upward bias. The historical price data shows a range-bound movement with support around $2.82 and resistance at $3.14. The forecast data suggests a continuation of this trend with prices fluctuating around the $3 mark. Considering these factors, a potential strategy could involve a long position entry around $2.90, with a stop-loss order placed at $2.82 to limit potential losses. The target price could be set at $3.14, aiming to capture the potential upside move. Additionally, the RSI indicator can be used as a confirmation signal. Buying when the RSI dips below $30, indicating oversold conditions, could further enhance the probability of success. Monitoring the Bollinger Bands can also provide insights into potential price movements. Buying near the lower band, especially if the price is showing signs of bouncing off support, could present an attractive entry opportunity. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a general downward movement, and the forecast data suggests this trend will continue. The RSI indicates that the asset is not oversold, currently hovering around $37. The Bollinger Bands show price action converging, suggesting a potential continuation of the downtrend. Therefore, a bearish strategy is recommended. We will enter a short position at the market price when the price dips below the support level of $4.72. The stop-loss order will be placed at $5.12, above the recent high and to limit potential losses. The target price is set at $4, which is a significant support level based on historical data. This strategy aims to capitalize on the expected continuation of the downtrend while managing risk through a defined stop-loss order. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a general decline, with the forecast data projecting further downward movement. The RSI indicator is hovering around the neutral level, suggesting a lack of strong momentum in either direction. However, the price action is consistently testing the support level of $7.81, indicating potential for a bounce. A suitable strategy would be to wait for a price bounce off the support level around $7.81. The entry price would be set at $7.90, with a stop-loss order placed at $7.70 to limit potential losses. The target price would be set at $10.50, aiming for a $1.32% gain. This strategy combines the support level bounce with the potential for a short-term upward movement. Based on the provided data, BTC appears to be in a downtrend. The historical price data shows a consistent decline from February 18 to March 3, with the forecast data projecting further downward movement. The RSI indicates that the asset is currently oversold, suggesting a potential for a short-term rebound. However, the overall trend and the support and resistance levels suggest that the downtrend is likely to continue. Therefore, a short position is recommended. Enter a short position at the market price around $330. Set a stop-loss order at $326, which is the recent resistance level and a key support level. The target price for this trade is $287, the identified support level. This strategy combines the bearish outlook with the oversold RSI condition, aiming to capitalize on a potential short-term bounce before the downtrend resumes. Based on the provided data, THETA network appears to be in a downtrend. Historical prices show a consistent decline, supported by the forecast data predicting further drops. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The price consistently touches the lower Bollinger Band, suggesting strong selling pressure. A buy position is not recommended at this time. We can implement a short selling strategy with an entry price at $1.17, a stop loss at $1.28, and a target price at $0.989. This strategy capitalizes on the downtrend and the predicted drop to the lower Bollinger Band. The stop loss price is placed slightly above the recent resistance level to minimize risk. The target price aligns with the lowest forecast price, offering a potential for significant profit. Based on the provided data, WorldCoin appears to be in a downtrend. The price has been generally declining over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. The RSI, while not showing extreme oversold conditions, remains below $50, indicating bearish sentiment. A potential strategy could involve entering a short position when the price reaches around $1.10, with a stop-loss order placed at $1.15 to limit potential losses. The target price could be set at 99 cents, based on the forecast low for the coming week. This strategy leverages the perceived downtrend and utilizes the RSI and price forecast to determine entry and exit points. Remember that this is just a suggestion and should be carefully considered before making any investment decisions. Based on the provided historical and forecast data, Hooked Protocol appears to be in a sideways trend with a slight upward bias. The support level around $0.183 remains strong, while the resistance level at $0.198 has been tested multiple times. Considering these factors, a long position could be initiated around $0.185 with a stop-loss order placed at $0.183 to limit potential losses. The initial target price could be set at $0.204, aiming to capture the next resistance level. For risk management, a trailing stop-loss could be implemented to lock in profits as the price moves in favor. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The support and resistance levels also indicate a bearish bias, with the resistance at $0.721 proving difficult to overcome. Given this trend, a short position is recommended. Enter a short position at the current market price of $0.654. Set a stop-loss order at $0.687, slightly above the recent swing high. Aim for a target price of $0.568, based on the forecast data and the support level. This strategy leverages the downtrend and aims to profit from the potential decline in artificial superintelligence alliance's price. Based on the provided historical and forecast data for Polkadot, a potential investment strategy emerges. The historical data suggests a slight upward trend, but the forecast indicates a potential downward correction in the coming week. Support at $3.75 provides a safety net, while resistance at $4.60 could cap upward movement. Employing the RSI strategy, we observe that the RSI is currently hovering around $40, indicating neither extreme overbought nor oversold conditions. Therefore, a conservative approach would be to wait for a confirmation of the downward trend predicted by the forecast data. A potential entry point could be around $4.60, with a stop-loss order placed at $4.40 to limit potential losses. The target price could be set at $4.20, aiming to capitalize on the predicted downward correction. This strategy leverages the support level and the RSI indicator to manage risk and identify potential profit opportunities. Based on the provided historical data and forecast, Filecoin appears to be in a sideways trend with potential for downward movement. The forecast price suggests a decline over the next week, supported by the recent price action that has dipped below the $3.20 level. Therefore, a bearish strategy is recommended. Enter a short position at the market price, around $3.24, with a stop-loss order placed at $3.30 to limit potential losses. The target price for this trade is set at $2.90, based on the forecast and the support level at $3. This strategy leverages the potential for a downward price movement while managing risk with a defined stop-loss. Based on the provided data, Conflux shows a slight upward trend. The historical price data, coupled with the forecast data, suggests a potential for continued growth. However, the price is currently near the upper resistance level of $0.111, indicating a potential for a short-term correction. Therefore, a cautious approach is recommended. We can initiate a long position when the price retraces to the support level of $0.0518, with a stop-loss order placed below the recent low of $0.102. The target price could be set at the resistance level of $0.111, aiming for a potential profit of approximately $10%. This strategy combines the support and resistance levels with a risk management approach, aiming to capitalize on the potential upward trend while mitigating potential losses. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with support holding around $19.40. The forecast data also suggests further downward movement in the coming week. Considering this trend, a bearish strategy is recommended. A suitable entry point would be around $21.50, the recent low. The stop-loss should be placed above the recent high at $27.70 to limit potential losses. The target price could be set at $19.40, the identified support level. This strategy also incorporates the RSI indicator, which is currently below $40, suggesting oversold conditions. Additionally, the price is currently trading below the Bollinger Band, indicating potential for further downward movement. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below the support level of $20.10. The forecast data also suggests a continued downward movement in the coming week. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be around $22.50, with a stop-loss order placed at $23.50 to limit potential losses. The target price could be set at $19.50 based on the forecast data and the historical support level. RSI suggests that the asset is not oversold, and Bollinger Bands indicate a potential for further downward movement as the price is approaching the lower band. This strategy capitalizes on the bearish trend and aims to profit from the expected price decline. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support level at $0.0242 provides a potential buying opportunity. A long position could be initiated at the support level of $0.0242 with a stop-loss order placed at $0.0235 to limit potential losses. The target price for this trade could be set at $0.0300, which represents a potential upside of 24%. This strategy combines the trend analysis with the support level to identify a potential buying opportunity with a defined risk and reward profile. Based on the provided data, PENDLE appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with a significant drop on March 3rd. The forecast data also suggests a continuation of this downtrend in the coming week. Therefore, a bearish strategy is recommended. A suitable entry price would be around $2.85, the closing price on March 3rd. A stop-loss order should be placed at $2.94, the high of March 3rd, to limit potential losses. The target price could be set at $2.34, the forecasted low for March 7th. This strategy utilizes the downtrend and the forecast data to identify a potential entry and exit point. Based on the provided historical and forecast data for the sandbox, a potential investment strategy emerges. The price shows a downtrend with a forecast suggesting further decline. The support level at $0.275 provides a potential entry point, while the resistance level at $0.306 might act as a ceiling. A stop-loss order could be placed below the support level at $0.270 to mitigate risk. The target price could be set at $0.250, aiming to capture a significant portion of the potential downside movement. Furthermore, the RSI indicator suggests potential oversold conditions, with readings below $30. This aligns with the bearish outlook suggested by the price action. The Bollinger Bands indicate a narrowing range, which could precede a breakout in either direction. However, given the prevailing downtrend, a breakout below the lower band could signal further downward movement, reinforcing the bearish position. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below its support level on several occasions. The forecast data also suggests a further decline in price over the next week. The RSI indicator is currently below $50, indicating bearish sentiment. We can initiate a short position when the price dips below the support level of 27 cents. A stop-loss order should be placed at $0.275 to limit potential losses. The target price for this trade could be set at 25 cents, based on the forecast data and the overall downtrend. Additionally, the Bollinger Bands suggest a continuation of the downward trend as the price is trading below the middle band and moving closer to the lower band. The RSI indicator, currently around $34, is not oversold but could indicate a potential for further downward movement. Combining these signals, the short position strategy appears to be the most suitable based on the available information. Based on the provided historical and forecast data, ENG coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further decline in the coming week. Considering this trend, a short position could be considered. A good entry point might be around $0.110, as this price level has acted as a temporary support in the past. A stop-loss order could be placed at $0.115 to limit potential losses. The target price could be set at $0.095, based on the predicted decline and the support level identified in the forecast. In addition to the trend analysis, the RSI indicator suggests a potential short opportunity. The RSI is currently hovering around $38, which is within the neutral range. However, considering the downtrend, a further decline in RSI towards the oversold level of $20 could signal a stronger selling momentum. Furthermore, the Bollinger Bands indicate that the price is trading near the lower band, suggesting a potential bounce back. However, if the price breaks below the lower band, it could confirm the downtrend and strengthen the case for a short position. Therefore, a combination of trend analysis, RSI, and Bollinger Bands suggests a short position in ENG coin with an entry price around $0.110, a stop loss at $0.115, and a target price of $0.095. Analyzing the historical and forecast data for Uniswap, the trend appears to be bearish. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The support level at $6.90 is crucial, and a break below this level would confirm the bearish outlook. Considering this, a suitable strategy would be to enter a short position at $7.29, the first forecast price, with a stop-loss order placed at $7.50, slightly above the immediate resistance level. The target price could be set at $6.48, the lowest forecast price, aiming to capitalize on the expected price decline. Based on the provided data, Chainlink appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator is hovering in oversold territory, suggesting potential for a short-term bounce. However, the Bollinger Bands show that the price is trading below the middle band, indicating a bearish sentiment. Therefore, a bearish strategy is recommended. Enter a short position at the market price around $14.80. Set a stop-loss order at $15.30, above the recent resistance level, to limit potential losses. The target price for this trade is $13.80, which represents the strong support level. This strategy leverages the downtrend momentum and the oversold RSI, while managing risk with a well-defined stop-loss. Based on the provided data, Aave appears to be in a downtrend. The historical price data shows a consistent decline from February 18th to March 3rd, with a significant drop on March 3rd. The forecast data also suggests a continued downward trajectory. Considering the support and resistance levels, the current price is below the resistance level of $192, but above the strong support level of $156. Therefore, a bearish strategy is recommended. A suitable entry price for a short position could be around $190, as this is close to the resistance level and the price has recently bounced off the support level. The stop-loss order should be placed above the recent high of $194 to minimize potential losses. The target price could be set at $156, which is the strong support level and represents a significant downside potential. This strategy also considers the RSI indicator, which is currently in oversold territory, suggesting a potential for a further decline. Based on the provided historical and forecast data, EOS appears to be in a downtrend. The price has been declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support price of $0.484 provides a potential floor for the price, while the resistance price of $0.579 poses a significant hurdle for upward movement. Considering these factors, a bearish strategy could be employed. A potential entry point could be around 56 cents, with a stop-loss order placed at $0.579 to limit potential losses. The target price could be set at $0.484, aiming to capitalize on the anticipated downtrend. This strategy leverages the downtrend and the identified support and resistance levels. It's important to note that this is just a suggestion, and any investment decision should be made after careful consideration of your own risk tolerance and financial situation. Based on the provided data, Tron appears to be in a sideways trend with a slight downward bias. The historical price data shows consolidation around the support level of $0.227, with occasional dips below and bounces back. The forecast data suggests this trend might continue, with prices potentially hovering around $0.235. Considering the RSI, which currently sits around $45, the asset is not considered oversold. However, if the price dips below the support level of $0.227, a long position could be considered. A long position could be entered at $0.227, with a stop-loss order placed at $0.224 to limit potential losses. The target price could be set at $0.243, based on the historical resistance level and the forecast data. This strategy aims to capitalize on a potential bounce from the support level, with a defined risk and reward profile. Monitoring the RSI and Bollinger Bands for further confirmation and potential adjustments to the strategy is recommended. Based on the provided data, Suncoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data suggesting this trend will continue in the coming week. The RSI, hovering around $35 to $45, indicates the asset is not oversold but lacks strong bullish momentum. The Bollinger Bands are relatively tight, suggesting low volatility. Given these factors, a short position could be considered. A potential entry point would be around $0.0173, with a stop-loss placed at $0.0182, slightly above the recent resistance and the next support level. The target price could be set at $0.0164, the predicted low point in the forecast data. This strategy leverages the potential for further price decline while managing risk with a well-defined stop-loss. Remember, this is just a suggestion based on limited data, and thorough research and risk assessment are crucial before making any investment decisions.